Hi, this is Lara from Elliott Wave Forex with a free gold Elliott Wave analysis for you on the 22nd of September. I'm going to start this analysis with a look at an historical chart going back to the early mid-70s. I've had a look at data prior to that and it was lower, so I'm pretty happy with the idea that we had a long sustained rise, and I'm going to label this the end of a super cycle wave C. I've got a bit of a question mark over this super cycle wave 3 and 4 labels. The data prior to this isn't really in enormous detail. I haven't looked at it too closely. It just looks like a nice long sustained rise. Certainly looks like a third wave. It looks pretty steep. But I could be wrong. That could be just a super cycle 1. Thereafter, I'm really happy with this labeling. We've got some fantastic Fibonacci ratios in here. I've labelled this a cycle wave A, B, and a cycle degree wave C ending down here in August 1999. Cycle degree wave A here is a Fibonacci 54 months in length. Cycle degree wave B lasted a Fibonacci 34 months and was a 50% correction of A. Cycle degree wave C lasted 141 months, which is just 3 months off of Fibonacci 144, and most remarkably, it was just 3.16 longer than 0.618, the length of A. A really, really nice, very, very close Fibonacci ratio in there. So I have a lot of confidence with this piece of labelling here. Once we move into this more recent upwards movement though, I've been very, very conservative and allowed my waves to be pretty long, not trying to call a high in too soon. I don't have as much confidence as my labelling of this more recent movement as I do with movement prior to 1999. So I've labelled an end of a cycle degree wave 1, 2, and we're getting towards the end of a cycle degree third wave here. I'm going to take you to a monthly chart that's got more detail now. And here's the end of that cycle degree wave 1, 2, and working on a cycle degree wave 3. Within it we've got primary 1 is over, 2 is over, and I'm labelling this a continuation of primary wave 3, a target for the upside 1367.97 to 1446.96 for primary wave 3 to end. At that stage will then be due a fourth wave correction that cannot move into wave 1 price territory. Looking at these ratios between primary waves within cycle degree wave 1 to the upside, primary 3 has no Fibonacci ratio to 1. Primary wave 5 is 10.6 short of 4.236, the length of this short little primary wave 1, which is an unusual Fibonacci ratio but a mathematically correct Fibonacci ratio. Within cycle degree wave 3 so far, we've had primary 1 and 2. If primary 3, which started down here at 681.65, reaches 1.618, the length of this primary wave 1, that'll take price up to 1446.96. That's the upper end of my target zone. Within primary wave 1 here, these ratios between intermediate 5, 3 and 1. Intermediate wave 5 is just 5.27 longer than 1.618, the length of this wave 1. And intermediate wave 5 lasted a Fibonacci 3 months. Intermediate wave 3 has no Fibonacci ratio to intermediate wave 1, and it lasted 7 months, just 1 month short of a Fibonacci 8. And this first wave lasted 6 months, which isn't a Fibonacci ratio at all, or number at all. Thereafter, within primary wave 3 to the upside, ratio between 1 and 3 at intermediate degree, there is no Fibonacci ratio that I can find. If intermediate wave 5 reaches equality with intermediate wave 1, it will take price up to 1367.97. So that's the lower end of my target zone. So that's how I've worked out that target zone. Taking you now to a daily chart where this black 3 and 4 is now here. Here's this black 3 and 4 down here. Within wave 4 intermediate degree, this blue wave B is a 57% correction of A, and I can find no Fibonacci ratio between waves A and C blue here. Starting on black or intermediate wave 5, This last wave up of a primary third wave, we've got a minor 1, 2, and working on a minor third wave to the upside. This first wave at minor degree is beautifully contained in a parallel channel drawn using Elliott's technique. A trend line from 1 to 3 is first drawn, a parallel copy placed on the low of 2. Tiny overshoot here for 4, tiny overshoot here, tiny overshoot here. Otherwise, absolutely beautifully contained with each of 1, 2, 3 and 4 touching or slightly overshooting that trend line. Ratios within blue or minor wave 1. Pink wave 3 here is just 1.56 longer than 1.618 the length of pink wave 1, and pink wave 5 is 2.03 short of equality with wave 1. So this is a textbook perfect impulse for this first wave at minor degree. Pink wave 1 lasted 19 days, just short of a Fibonacci 21, a couple of days short, probably a bit too much really. And pink wave 3 lasted 37 days, a bit too much over a Fibonacci 34. Pink wave 5, however, was bang on a Fibonacci 21 days, so that's quite nice again. Within this blue wave 2, ratios between A, B and C pink. Pink C is 11.28 longer than 0.618 the length of pink wave A. And wave B was a 41% correction of A. So far within blue wave 3 to the upside, if pink wave 3, which began here, reaches equality with pink 1, that'll take price up to 1341.68. So that's how I've worked out that more short-term target to the upside there. So just taking you back to that historical chart, I expect we've got a fair way to go before we see an end to this cycle degree third wave, and at that stage we'll have a pretty good fall to the downside for a fourth wave, because the second wave correction was really shallow. We could reasonably expect an upcoming fourth wave correction to be a lot deeper. It can't move into cycle degree wave 1 price territory, however, so we'd have a lower limit of any upcoming fall at 730.2. Gold couldn't fall below that price if this wave count is correct. So for what it's worth, there's my free Elliott wave analysis of recent gold price movements for you. I hope that helps you when you're trading.